don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
Hi everybody, it's Lawrence here from financialthing.com coming to you today with another Trading 212 £5,500 portfolio update. It is November the 29th, 2020. We started this portfolio on September the 23rd, so just a little bit over 2 months at this point. Don't forget to hit that subscribe button if you can. Helps me out, and hit that like button if you enjoy the video. Let's get right into it and see where we are right now on November 29th. As you can see, the portfolio is just doing amazingly at the moment, up about 30% in the green so far. The markets have just gone bonkers. Even Bob, who you know is your uncle, has been making money in this market if they've been invested in the right things. It seems like a license to print money, but don't get complacent in this market because this is just not indicative of the way markets usually move. And a market correction is definitely something that could happen in the next 3 months. So again, I'm not being complacent. I feel like this portfolio has just gone absolutely bonkers and it shouldn't be doing this, but it's done well. So let's go into the numbers here. We started with £5,500. Now, originally I was supposed to have an investment amount of £5,500. I think I might have put a little bit too much in at some point because right now it shows our investment amount at £5,559. So a little bit over, not really going to make much of a difference in these results. But you can see we've had a return of £1,668 in the green, which again represents 30%. And we're up from £5,559 to £7,239. Absolutely crazy. There's a couple of stocks in the portfolio that have really been stars of the show. And we did make some changes this week, including selling off some Apple stock, which has sort of been performing very mediocrely, and also selling Nextera Energy, Fastly, which was the absolute stinking loser of the portfolio. And I also sold off DocuSign and went ahead and invested more money into Magnite, which was the stock we picked up a couple of weeks ago, and it's been an absolute top performer. So I'll show you right now those trades so you can see what I did. Okay, so I'm going to make a change to the portfolio here and sell off these DocuSign shares and put the money into Magnite. So let's go ahead and make that trade today. The reason I'm doing this is I think in the short-term period of over the next few months, Magnite has a real chance to explode in price, whereas DocuSign I think is more of a very, very long-term pickup, which I'm really looking for a lot of growth at the moment with what's going on in the markets. Magnite could definitely be very volatile, and I wouldn't be surprised if we saw a major drop, but I'm going to go ahead and roll the dice. So let's go ahead and sell off all of these DocuSign shares and take a little bit of a loss, but only about 0.5%. So let's do that. So you can see we no longer have DocuSign shares, and we're going to go ahead and take that extra cash and buy these Magnite shares today. So we're going to put in £223, which is another 22.357 shares of Magnite. Let's go ahead and make that trade. And there you go. I've decided to make yet another change to the portfolio and go even harder into these Magnite shares. Call me crazy, but my gut's telling me this company is really going to take off. See, which company are we going to get rid of to do this? We are going to sell Salesforce. Goodbye. That's gone. We had a 7% profit on there. We're also going to sell these Blackline shares, which we have a 10.94% profit on. Let's go ahead, get rid of those. Those are gone. We have about £485 to make this trade before the market ends and closes today. So let's go ahead and do that. Here we go. Bang. So going heavily into Magnite right now. We're going to make another Magnite buy to bump up the holdings on the Magnite shares just a little bit more. And to do that, we're going to get rid of a little bit of Apple stock. We have 1,133 pounds worth right now. So we're going to trim that down by about 330 pounds. So let's go ahead and make that trade now. So let's sell 300 and, you know what, let's sell 300 pounds of Apple stock. It's about 3.36 shares. Review order, sell. We'll just wait for that trade to come through. Okay, so that order has been executed. And we'll go ahead and buy another 300 pounds of Magnite shares. Create that trade. Let's wait for that to execute. And there we go. That trade is complete. Changes we're going to make this week is to really get the portfolio more into growth, rather than focusing too much on the dividends. So I'm going to do some trimming down and addition to some existing stocks. So let's go ahead and do the first one. The first one I'm going to do is to trim down the Apple stock again. I think, again, Apple's great for long-term growth, but for the portfolio of what I'm trying to achieve over the next 9 months is really going to be for growth. And I'm thinking that to have so much into Apple is not going to be the best idea. So I'm going to trim that down by about 304 pounds. Let's go ahead and do that. 304. Fastly, you've been the real loser of the portfolio, so now it's time to cut you loose. I think long term this will definitely rebound, but since I'm trading and trying to make the best out of the portfolio, that one has to go. So we are going to sell off all of the Fastly shares. Goodbye, Fastly. We'll take a loss on that one. Not too much of a loss, 18 pounds, 78p today. So that is gone. The next change is going to be Nextera Energy, which hasn't really performed all that well the couple of months we've held it. Again, that's another dividend stock, so we're going to sell Nextera Energy for a small profit. Let's get rid of all of those shares. It'll give us another 224 pounds to work with here. So that one is gone from our portfolio. So that gives us an extra 650 pounds to work with this week. And call me crazy, but I still have a really good feeling about these Magnite shares. So I'm going to purchase another 325 pounds of Magnite shares today. Let's go ahead and do that. So we have another 325 pounds to spend. I'm going to go ahead and pick up some more of this JP Morgan stock. Let's put in 125 into that. And the other 200 pounds are going to go into Tesla. Bingo. My thinking behind Tesla is since it was added to the S&P 500, you're going to see more and more investment go into that stock. Not to say the stock is the best stock in the world, because Tesla cars obviously have their problems, but as far as a shorter term growth stock, I'm willing to gamble that Tesla is going to rage higher unless the market somehow corrects. So we went ahead and put some extra cash into that. And let's go ahead and run through the portfolio for a quick update on how the stocks are doing individually. Right here at the top, we've got this AbbVie stock. Again, this is a dividend play, up a very healthy 14.28% in the green. Alphabet, Google, up 19.98%. Alteryx, this one has been sort of a mediocre performer compared to the rest of the portfolio, but this is the one that was up quite a lot and then really dropped back a lot. So I'm not sure if I'm going to make any changes to that. That's probably a very long-term holding, but right now at 7.2 0.22%. And we've got Apple again. This has been a mediocre performer. I'm quite surprised. I thought it would move more than that, but it really hasn't. So only up 2.77%, which is one of the reasons that I reduced the holding. You remember a couple of weeks ago, we were holding about 800 or 900 pounds of Apple stock, back down to about 509 pounds right now. JP Morgan Chase up to 305 pounds in holdings, so 9.53% into the green. Lloyds Bank continues to be another good performer in the portfolio, up just a little bit under 50%. Who would have thought that about Lloyds Bank? If you look at the charts here over the last week, there has been a little bit of movement up and a movement down, up to a high of about 39.39p, all the way back now to 37p. Not too worried about that. We've had a healthy gain. We may go ahead and take some profits out of Lloyds Bank in the upcoming weeks. Logitech here up 11.14%. Happy about that. And this has been the star of the show, Magnite, up 38.36%. Again, you'll have seen me move some money from other shares, including Apple, from DocuSign and Fastly into Magnite. So we've got a pretty big percentage of our portfolio now in Magnite, about 40% of our portfolio in those shares, because again, I believe this is going to be a growth stock in the portfolio. So I went ahead and took a gamble on that. It does present some extra risk having so much money of our portfolio into this one share, but you know that we do it for the entertainment of the masses here on the Financial Think channel. Let's continue on. Sea Unlimited up 16.89%, relatively small holding in the portfolio, but still doing well. And Tesla, look at this. Tesla now 39.78% into the green. We did add some more money into Tesla, and it's been just continuing to rip raw through since its addition into the S&P 500 now. Still just continues to perform like you wouldn't believe, which is weird because Tesla, they just really don't make that high quality cars, but it is what it is. We're just really taking shots in the dark in some companies here, and Tesla just seems to be continuing to the moon. Finally, Trade Desk. This is one of my regrets here. We sold some of the Trade Desk shares in the previous weeks, back when it was down to about in the green 50%, and that turned out to be a bit of a mistake, because you can see here Trade Desk is up now almost 81%, and unfortunately we trimmed our holdings down. We just don't have a lot in the portfolio, but you can see it's been a really great performer. So how is our stock picking experiment portfolio doing compared to our trusty Vanguard US index fund? I tell you what, the US index fund is really doing well, and if this were in normal times, I'd be extremely happy. But compared to our stock picking portfolio, I have to be honest, our US equity index tracker is really just very far behind in terms of percentage gains, and that really is to be expected. Is again, don't forget that these index trackers hold thousands of stocks, so you're not going to see those explosive highs and those explosive lows, because the risk is just not as high as what we're doing with this very small portfolio of just a few different stocks. So these results are completely to be expected. And again, over the long-term period of years, I expect these results to very much be skewed and the index tracker to perform as well as a general stock picking portfolio, which really needs a lot of luck to hit the home runs in the stocks, which I've been very fortunate to do this time. So the results of the tracker from September the 23rd, 2020 to the last pricing date of November the 27th, 2020, the index tracker is up 9.7%, which is huge. I mean, we're talking about 2 months. So if you were to multiply that another 6 times, you're going to see huge gains over a year if the market continues to do that, even if you own the tracker. But 9.7% over a period of 2 months with the tracker, absolutely incredible results. You can see the increase here from price £551.43 up to £605.27. That represents 9.76%, so almost close to 9.8% in positive returns, versus our trading portfolio, which is up a whopping 30%. You can see quite a big difference, but again, over the long term, that is not going to be typical of the results that I would have as a stock picker. So that's going to do it for this week. Don't forget to hit that subscribe button to follow along on this journey as I go through this manic experiment of trading 212 stock picking portfolio. It's going to be a wild ride over the next few months, I promise that. So follow along. And don't forget to visit financialthing.com for the latest peer-to-peer lending reviews and general DIY investing information. Until next time, I hope you have a great week. Take care.